Is the Twin Cities real estate market slowing down? That's a great question that we've been getting and actually wondering ourselves as we're kind of watching some of the market trends in the Twin Cities as we are winding up the first half of 2025. Want to share with you six different indicators that we take a close look at in advising our clients on where the market is going. The first thing is seasonality. We have in the Minneapolis St. Paul market, we've got a lot of seasonality where we've got some peaks and some valleys. You've heard me say it before. The market takes a nap between Thanksgiving and the Super Bowl. Beyond that, once we hit that spring market in early February, we're going really strong. The first half of the year is definitely stronger than the second half of the year. So when we hit the Memorial weekend, there's the official start, or I guess the unofficial start to summertime. We definitely see the market slowing down or settling in rather to more of a stabilized market. So we're definitely experiencing that already. The second thing I wanted to share with you that is something that we're watching is maybe having an impact on the market trends is mortgage volatility. Over the last 3 or 4 months, we've definitely seen some big swings, ups and downs with the economy, which also affects interest rates. And with that, the interest rates we're seeing sometimes on a weekly basis, 0.5% swing either way with those mortgage rates. We're kind of seeing things settle into a mid sixes. We've seen some rates that are right down to about 6 or even below that, depending on which type of mortgage you're looking into. But there's definitely some volatility on a daily basis. So it makes very good sense to talk with a experienced mortgage professional when you're looking to buy a house, because those mortgage rates can make a big difference if you are looking to lock in an interest rate. The third thing I wanted to share with you is something that we look at on a regular basis is the showing activity. And that's something that really isn't published, but having our finger on the pulse of the market with a number of listings, we're kind of watching different price points, different style of homes, and where we're getting the activity. And what we look at is that showing activity. Is that a real robust price point? Is it a starter home that's getting a lot of activity, or is it an upper bracket home where maybe we're getting 1 or 2, 3 showings a week, and with those buyers taking a look at it? The other thing with that is we also look at the open house activity. Open houses are a big part of our business, and it gives us an opportunity to interact directly with the consumers and kind of find out what they're looking for, what their plans are, get a firsthand right from the horse's mouth, so to speak, from the consumers of what they are looking for in real estate. So those starter homes are definitely the hottest price point. We've got a lot of those first-time buyer millennials that are tired of paying rent, and they're getting out to buy their first home. So those homes are certainly in high demand. The second thing we take, or the fourth thing rather, that we take a look at are price adjustments. And when we're looking in the MLS, it's something that we really haven't experienced in the last few years, but making sure that we're taking a close look at any of those price adjustments. We've had a number of our listings where we put them on the market and we think, you know what, this is a really good price, but then we're not seeing the activity and we have to make an adjustment with that. It can't just throw it up there and see what sticks. We want to make sure that we're actively adjusting to where the market conditions are. We've looked at the MLS in a couple different markets, and some markets it's as high as 1 out of 4 homes. Others, it might be 1 out of 10 homes that are having a price adjustment before they have the property sell. So that's really important to take a look at. It's something, again, that we haven't really experienced in the last few years. But with that, that certainly points to the market stabilizing or even slowing down in some areas. You can't be as optimistic on price, but you definitely need to be a lot smarter when you're pricing properties and taking a look at the competition. Inventory growth is another point that we want to take a look at. Number 5, we look at the absorption rate. And what that absorption rate is if we didn't have any more properties hit the market as of today, how long would it take for all of that inventory to get gobbled up by the buyers? And historically, a balanced market is anywhere from 4 to 5 months of inventory. We're rated about 2.5 months in the Twin Cities market, which is actually a real healthy number. And if we're even trending up even to 3 months, we're definitely not into a buyer's market overall. but certainly is trending to more of a stabilization with that inventory. New listings coming on the market might be slowed by some of the interest rate questions. So those new listings might be getting gobbled up, but then there's also some of those price adjustments, those properties that maybe need to be adjusted to where the market conditions are. So watching that absorption rate is something that we look at again within each market segment. So we take a close look at that. The last one I want to share with you are pending sales. And that, if you kind of watch the flow of the seasonality, the mortgage volatility, the showing activity, any price adjustments and inventory growth, where the rubber meets the road is the pending sales. And what we've seen year over year is actually that the pending sale trend is a little bit up, but for the most part, most of our market indicators are just above where they were last year and kind of falling in line. So what that tells me is that our market is stable. We need to be smart on pricing for sure, and definitely go all in on condition to get those properties sold. So if we're thinking that we might be able to make any allowances when it comes to some fix up things, or maybe some things that maybe are outdated, making sure that we are in line with what the consumers are looking at, where the market trends are in a shifting market or even a stabilizing market where we're heading, is going to be more and more competition. So we want to be aggressive when it comes to the condition, making sure the home is in premium condition to get a premium price. So what does this mean for sellers? For sellers, it means we need to be really, really dialed in on the market activity, taking a close look at that. And then also, again, the condition. So making sure that the condition of the home, any of those things that we can hedge to make sure the buyers are going to be really picky again, and making sure that we don't give them any objections when it comes to looking at the house. So we want to make sure that we're going all in on both of those factors. What does it mean for buyers? Actually, this is really good news. We're seeing, again, more selection for buyers, and we're also seeing more of a moderate pace when it comes to homes being on the market. We're seeing about 45 to 60 days for homes being on the market, which is definitely falling in line with more of a stable market conditions. It gives buyers more of a chance to make selections. Again, those good homes will sell quickly, and if you're more optimistic on the price and conservative on price, those homes might be sitting on the market. Not that there's anything wrong with them. It just maybe that home is in premium condition, but they're a little bit optimistic on the price. For buyers, that also means opportunities to do full-blown home inspections, negotiating some concessions with the sellers, even some contingencies. We've had a couple of contingent offers that actually worked out quite well. So we're kind of going back old school with the market conditions and flexing the experience that we've got for our clients. If you're thinking about making a move, certainly reach out to us and help you navigate where we are in the marketplace, and we can help you get the most amount of money in the least amount of time for your home. If you're looking to buy or move up, today's a great time to make a move. Again, we're seeing some of that volatility with interest rates, but for the most part, it's healthy, and we're seeing some good market conditions for you to sell and then also to buy a home. Reach out to us, 651-777-3434, or you can email us. Click us on any of the social channels. Reach out to us any way you want. We'll be happy to help you navigate the process. Thanks. Have a great weekend. See you next week.